Welcome back to Yahoo Finance. And we've been talking a lot about marijuana stocks to let us know how one company is doing. We invite into the stream Zack Guzman, who anchors our midday coverage, but also a special guest. Zack?
Yeah, thanks, Adam. Appreciate it. I'm here joined with Canopy Growth CEO David Klein back with us on Yahoo Finance. David, thanks again for coming back. And I guess we'll just start with the numbers you guys reported earlier this morning. An impressive quarter. Net revenue up 23% over last year's quarter, topping 152 million Canadian. Importantly, the adjusted EBITDA loss came in better than expected as well, narrowing for the third straight quarter. But importantly, just got to point this out, you guys matched up what you told us here on Yahoo Finance Live back in January, that you expect federal permissibility to perhaps come through due to marijuana reform here now at a federal level in 2021. That was a big update here. And you also guided to potentially seeing adjusted EBITDA profitability in the back half of your next fiscal year. So a lot here hinging on those two updates, and clearly shares investors rewarding that up more than 10% in today's session. But talk to me about how much that forward guidance hinges on the laws changing and what you see playing out there this year.
Yeah, so the interesting point is that the forward guidance really doesn't include anything related to U.S. permissibility. That would be upside to our profit projections and our revenue growth projections. So we're really banking on continuing to perform well in Canada, continuing to do well in our German market where we have the #1 share, and continuing to drive the U.S. CBD market in addition to our U.S. business for BioSteel in particular.
Wow. Okay. So that's on top of it. Yeah, it was interesting to see, earlier this week, you guys joined Acreage, of course, the U.S. operator you're poised to take over, Curaleaf, Cresco Labs, a smattering of other U.S. operators here joining to create the U.S. Cannabis Council, a nonprofit to push for that unity around advancing the goal of cannabis reform. That seemed big because a lot of people have been pointing out that maybe the U.S. operators would try and block Canadian companies such as yourself to maybe stop entering the U.S. market. So how significant is that in maybe seeing unity on that front? And maybe how does it extend the percentage chance that you do see those laws changing here this year?
Yeah, look, I think our experience in other areas, like looking at alcohol, for example, you really need a united front from an industry standpoint if you're gonna have a real effective lobbying presence. And so it doesn't mean that you always agree with your partners on the various councils, but I think it's important to create that unified front. And so that's what the United States Cannabis Council is really all about. And in terms of the view maybe of competitiveness between the MSOs and the Canadian LPs, I think, the ultimate winner in the space is going to be the company that can create real value by creating differentiated products that your consumers love, right? And so it's not going to be one particular thing like access to capital, because we have that, but I suppose everyone does at this point. It's going to include things like, can you build brands? Can you innovate? Do you understand your consumer? Can you build basic CPG like supply chain efficiency in an environment that will allow for or require interstate commerce? I think it's bringing all those things together are really important for Canopy to be successful in the US, but also, I think will make all of the players, whether they're the MSOs or the LPs, stronger.
Yeah, and you talk about distinctions here in Canopy's stance as a company versus maybe some of the other cannabis companies out there. They got two things when you came on board. One would be, your attention to efficiency as you're talking about it. And we've seen that over the last 3 quarters with a narrowing of that adjusted EBITDA loss. So, a lot of congratulations due there, and tough choices were made. But when you look at maybe the other thing that they get in terms of CPG creating brands in that space, you guys are doing a little bit of a different thing with building out your cannabis beverages. You gave investors the update on that front, but still waiting to see those come through here in the US this summer. So what's the update in terms of what you're hearing from consumers around that and share that you're gaining in Canada?
Yeah, so really looking forward to Acreage's U.S. launch of our brands into the U.S. Our brands continue to do well in Canada. We're somewhat slowed, I would say, by the equivalency standard in Canada, which really dramatically limits the number of cans an individual can take out of a retail shop, in some instances allowing an individual to take 4 or 5 cans home. So it really is slowing the growth of that space. We think that regulation will get changed over the next several months, which will help us in Canada. But, I think the real excitement is going to come when we can have those drinks in the US market itself.
Yeah, and a lot of people hoping that the Constellation Brands backing there would carry over. Obviously, a big alcohol giant there, but they've poured billions in you guys too. And I've joked around with you that maybe Canopy Growth had turned into Constellation Growth because not just you being there, but also the rest of the board presence as well. But I'd be curious how much maybe M&A might change depending on whether or not we get legalization. Because it would seem that they could maybe up their stake in you guys if that switches over. Or alternatively, I know you guys have the acreage deal in place, but you could also up your stake as you have been doing in TerraSen, that other U.S. operator you're working with. So how does maybe M&A shift if we do get federal permissibility, as you see later on this year?
Yeah, I think that's really perceptive because when Constellation invested in Canopy, the point was to create those differentiation points around making this more of a consumer-focused company. So that was one use of the funds. The other use of the funds was to have a bit of a war chest to be able to fill out white spaces in Canopy's portfolio, whether it be in the US or in Canada or in Germany. And so, we'll continue to think about our business that way. And we're one of the reasons why we want to get to the place where we're no longer posting that EBITDA loss is we want to conserve our capital so that we can use it to fill out gaps in our portfolio. And, we'll be as aggressive as we can, either through acreage or some other format as we get to a permissibility event in the US.
All right, Canopy Growth CEO David Klein, I'd be remiss if I also didn't congratulate you on the improved backdrop there, like the products you added. I appreciate you coming on here to chat with us, David Klein, as always. Adam, I'll send it back to you.